So let's get to our floor show. Joining me now, Annex Wealth Management Chief Economist Brian Jacobsen and the Fitz-Gerald Group Principal Keith Fitz-Gerald. And Keith, I want to pivot back to Powell here for a second with you before we start talking about technology. Because going into this, you had said that Powell's comments this morning were probably going to be a nothing burger. How surprised were you by what you heard him say this morning?
This is the kind of surprise I love because I didn't think he had it in him, but he apparently saw the light. Now, he was cashed 6 ways this Sunday and hedged and everything else he said, but awesome, love it, happy to see it. The markets have all the fuel they need now.
All right, they certainly do. Brian, your reaction to the speech by Powell this morning?
Well, yeah, I agree with Keith. Coming in, I actually had somewhat low expectations, figuring that he was going to be somewhat obstinate, digging his heels, or I guess since he's in Jackson Hole, digging his spurs. And instead, he delivered us a great message saying that he's seen the light, that the monetary policy is restrictive, the labor market isn't quite as solid as what he originally thought. And really, it reminds me of if you've ever been on the freeway behind somebody in the left lane, going too slow, and then riding on their brakes. He finally decided that maybe they should move over to the side to let the rest of the traffic through. And so I think that's really what the market's reacting to here.
Well, Brian, it was the employment comments that really, I think, got people jazzed up on Wall Street. But you say that employers tend to be shy about shedding workers in a slowdown and that jobs are a lagging indicator. So how are you going to parse the data as we move into September?
Yeah, and that's one of the annoying things about the Fed's mandate, right? They actually have a triple mandate, not a dual mandate. So full employment, stable prices, and moderate long-term interest rates. That's right there in the legislation. When they're talking about full employment, we do know that we had a slowdown in May and June, but labor is a lagging indicator. And so if he's just going to react to the labor market as opposed to being more proactive, that's a problem. And I think the key thing here is, remember, he has always talked about being data dependent, being very reactive. He never once in his speech mentioned data dependent. It was mostly about being a little bit more forward looking and less fearful about what might happen in terms of the boogeyman of inflation expectations. So I'm thinking that as long as those break evens on 10-year Treasury tips stay contained, which they seem to be, they have really a clear path to continue to cut rates.
Yeah, no, and he also said about the tariffs, which I thought was interesting, Keith, tariff price effects may be short-lived. When you say something like that, that takes away one of the biggest pieces of his argument to not cut rates sooner, because it kept saying, we don't know about the tariffs. We don't know about the tariffs. I'm paraphrasing, but he keeps saying it multiple times. I don't speak as well as Powell does, I guess, or maybe I speak better. But there's a lot of sectors and companies that are very sensitive to interest rates. Obviously, technology is one of those sectors. I teed up a bunch of news, Keith, on NVIDIA. You're a Palantir guy. What do you make of this?
Well, to be clear, I'm also an NVIDIA guy. I mean, many of the names that are running today, fortunately, I own, including both NVIDIA and Palantir. I think this takes tech right back to the head of the class. It takes every company that is adopting tech and using it right back to the head of the class. And we're not going to see some of that for several quarters, but it will be there.
Also, Brian, you're saying you're picky.
Yeah, just a little bit. I'm not necessarily team tech 100%. I agree with Keith that tech is a great place to be. But where I'm seeing more of those opportunities is think about the Dow components versus the NASDAQ components. And we see the Dow finally getting close to breaking a new record here. Think about the industrials, transportation, companies that are more consumer facing, those who can benefit from the technology. That's where we're seeing what we think are a little bit more reasonable valuations and also some of the more growth opportunities. One of our issues with tech is really in terms of just the growth expectations that you need to have in order to make the math work. And to us, it's a bit of a stretch, and it's a little bit easier to make the math work with, say, like home builders, capital markets, more consumer-facing areas.
All right, Brian Jacobsen, Keith Fitz-Gerald. Guys, thanks so much for being with me on